a very good panel, but very little time. So we'll, move directly, jump into the topic. And just to give a little background about me and what we do, because there are people here who are from the debt side, people from the equity side, and people from the user communities who use either or both of this. So I run Lead Angels, is an angel network which invests up to ₹1 crore in equity in startups. So that's my background. Prior to that, I've been in financial services. So I'm going to straight away jump into this. And coming from the research perspective, I wanted to ask Dhruv, who of course also runs a brokerage firm, is that credit is constrained in a developing economy like India. It's everybody's, and credit availability till now has been available largely from either institutions or, very unregulated markets like money lenders and so on and so forth. A lot of new products have come into the market, right from ICOs that we read about in the newspapers. Google just stopped advertising for ICOs yesterday to, the older methods. So how do you see that changing over the next, say, 3 years?
Good afternoon, everyone. Let me take the opportunity for a quick introduction here, because it happens to be that I'm on both sides. Being an SME, we are one of the latest stockbroking firms in the country. Now, as we all know, stockbroking has been there for the last 150 years. But we saw an opportunity through technology to be able to play a greater game. So as an organization, Trade Bulls happens to be about 4 odd years in the industry. At the same time, being a broker, we are also on the other side, because a lot of SMEs get in touch with us to look at their organizations from a fundamental perspective and how we can introduce them to equity investors such as yourself, which can invest in the organization. So we happen to be in both places. As an organization, we are roughly about 2,000 people across the country at this moment. As per National Stock Exchange, we are the fastest growing broking firm. Now, we do have a lot of people, but our backbone happens to be technology all the way, so that we are able to service our customers with least interactions and provide them the best of the service. Now, coming to the question, like our organization, we also see a lot of elements of capital going to be democratized. In fact, the 3 trends that I see in the Indian economy as well as the world, I call it the 3 Ds. One is dematerialization, second is demonetization, and third is democratization. Now, when it comes to capital, due to P2P or microfinancing based on technology, we do see a huge opportunity for the SME in the next 3 years to 5 years, where a lot of capital will not come from large lenders, but even retail investors who may want to invest directly into small to medium enterprises. One of the ways this is being factualized is through the listing into the BSE SME index and so on and so forth. So there is more information available of the SMEs to retail participants. So that is one element that we see, that through peer-to-peer as well as listing in the SME exchanges, the SMEs would be able to attract more capital. And one element that we touched upon in the last session, which was about human resources primarily, was about management and the pedigree of the management, which becomes very important for able to attracting capital, because that is what investors are looking for at this moment. That answers your question?
Thank you. Mandar, you come from the equity side of things, right? So you help companies to fund. So, and this market keeps on changing every quarter, Mandar, right? Every quarter, they have a new flavor of the, but do you see, so what are the challenges that you face as somebody who's investing into SMEs? That's what we want to share here. And what would be your advice to people who are looking to get early stage equity in their companies?
Thank you so much, Sushanto. That's an excellent area because that's what we do day in and day out, right? So just a quick brief introduction. So I represent Cross Border Angels, which is an international investor network wherein we scout startups, SMEs, ideas from 40 different innovation hotspots of the world, and we present them to our global investor base, right? So the investor consists of VCs, family offices, and even bigger funds. And it just started off as a small managed angel group around 3 years back, and we have now created a network which combines these different kinds of investors, right? But at the same time, what we also do is we also have over 100 to 150 corporates who are our members on the platform, again globally, who are looking to either partner with SMEs or looking to engage with startups, either as an investment or maybe a joint go-to market, or even it could be a joint product development, right? So that's an engagement platform that we have started. We call it as a pitch to CBA scouting platform, wherein we continuously engage with innovative corporates looking for these kind of ideas, right? Coming back to the question that Sushanto just mentioned. So there are a few key challenges when it comes to, I would say, funding in the unlisted space, right? See, when you have a listed company, be it financials, be it ratios, be it historicals, and even profiles of the management, everything is available in the public to verify and validate, right? That's not the case when it comes to SMEs or on the unlisted space. So one of the biggest challenge that we face is access to the right kind of validated data, right? So if we are being given certain financials or certain details about the management, probably we need to go a step further in verifying that the information that we receive is something that we can share with our investors, because we honestly are somebody who are in middle, who are a platform, who are sharing information with investors, so we need to play both the roles, right? So number one, it is access to information. Number two is, and that's the biggest challenge, is to once we have the financials, to arrive at the valuation of a particular opportunity, right? Because each one may have his different perspective, each one may have different logic behind arriving at the valuation, and honestly, the country still needs to come up with well-defined standard ways to arrive at a valuation, right? So because, in an unlisted space, you need to resort to projections, you need to resort to industry statistics to arrive at a valuation. That really becomes a challenge when you speak to an investor, right? Number three is the visibility of future revenues. Now, what happens is, when a funding takes place, or when we generally campaign an opportunity with our investor, they generally do not only look for the sales or the contracts that you have in the next 12 to 18 months. They would probably want to look at the longevity of your business, because it's not about the next funding round. It is probably all the way till the exit. So the challenge that we face is most of the ventures or ideas that we meet, they have short-term goals when it comes to probably 12 months to 15 months, but the investors are really looking a roadmap, all the way till the exit. And the fourth, which is most critical is, see, any investor, be it a financial investor or even a smaller angel investor or even a family office, is looking at an exit after a certain duration, right? There is always a mismatch between the objective with which an investor is investing in a company versus the rationale that the entrepreneur has, right? So an entrepreneur really wants an investor to stay with him probably 3 years to 5 years and even beyond. Whereas if an angel investor or even a VC is considering this as an asset class to invest, then he probably is looking at a 3 to 5 years range of exit. Now, in unlisted companies, you do not have a confirmed exit plan when you make an investment, because there isn't a secondary market in our country to trade your stake, right? It will take some while till you really arrive at those measures. But to confirm to an investor that, okay, X amount is to be invested in an unlisted company, which will give you exit within the 3 to 5 years at X multiple, is not something that every entrepreneur or promoter would be comfortable giving. They can, of course, give a roadmap, but a commitment is something that you can't give in this particular space, right? So these are the general challenges that we face. There are, of course, more that probably we can cover in the, in the course of the discussion. But yeah, these are some key challenges that we face in our rounds.
So, Robin, what has you come from the other side, as probably somebody who's dealt with banks, and what has been your experience? What are the challenges that you face where do you see that going forward? How has it changed? Or
I would like to share perhaps 3 ideas. Who doesn't want money? Money is the #1 requirement for each one of us sitting here. And believe me, ladies and gentlemen, there is enough money. There is enough money going around, be it equity or debt. And I'm quite convinced that there is enough money. The only issue here is that you and me need to think as to how a lender is looking at us. You need to get into the shoes of a lender. Let's take debt for the time being, because you've heard on equity investments now already. And debt is something which is more than equity. For every 100 rupees equity, you know there is 200 rupees of debt which we need to take to run our organization. You need to explain to them what is it is there for them. What is it the lender looking for? They are looking for, will the interest be paid on time? Will the principals be refunded on time? They're not looking for valuation. It's equity investors who are looking for valuation. If the market value goes up, they can exit on time, 3 years, 2 years, 5 years, whenever it is. So, please, ladies and gentlemen, suggestion #1 or advice #1 is, look at how your business is being looked at by the lender. That will be the single most important issue by which you will be able to solve the borrowing problems. And there is enough money if your project is good, if your project is having cash flows, and the project is able to pay the interest and principal on time, and you are able to prove that, you will get money. No problem at all. Because bankers are there to lend. The second issue is, to my mind, is ethics. Please be honest in what you are saying. Being unethical, and many of us adjust our balance sheet and profit and loss account, we don't show the sales on the right sales, we don't show the right profits. Many of us don't show the right stocks, many of us don't show the right debtors. And by inflating them, inflating debtors and stocks, understating creditors, we get more working capital availability and we borrow. These, to my mind, are all short-term. A business longevity is based on if you're ethical and if you're honest. It really works wonders. You will, of course, lose out short-term opportunities. Of course, you will find your neighboring person, your neighboring business doing whatever little adjustment they're doing. To my mind, it is a big harakiri. Be ethical, it works wonders. And that's my second takeoff in my experience. The third, there is no free lunch anymore. This country had an entry policy. You could start a business, but there was no exit policy. You couldn't stop a business. And there were one more thing, which means there were one more thing which was happening, that if you were not able to return the money on time to the bankers, bankers will give you new money to pay you the old money back, which means evergreening. So the evergreening has stopped. Please do not think that you shall get new money to pay back your old debt, old money. And number 2, IBC. The Insolvency and Banking Code clearly states that if you don't repay on time, and if you don't repay for 90 days, your business will be taken away and given to someone else. Therefore, there is now an exit policy for the bankers and the lenders. They can take your business away and make sure the money comes back. Number 2, you can yourself stop your business. If you're not doing well, you can actually go to the IBC legal forum and you can say, okay, I want to exit. It's not working for me. Definitely, I want to exit. So the 3 advice I have, ladies and gentlemen, is 1, there is enough money. Prove that you can return the money on time. 2, be ethical. And 3, there is now an exit policy. But please don't think I will get new money to pay with the old money. This should work for all of us.
So Ramnath, coming to your side, because you are now apart from being director of Mumbai Metro, you also run Maharashtra Metro. You also work with the rural issue, and I think recently, just day before, we had a group of farmers coming to Bombay, looking for waiver of their loans, right? So this whole issue of rural credit, I know it's a little away from what most of us are looking for, but if you could give a little, your view about, getting village entrepreneurs and investing in them through loans or even equity, what is your view and what has been your experience?
Other than being the executive director of Maharashtra Metro, which runs Nagpur Metro and Pune Metro, I'm also CEO of Maharashtra Village Social Transformation. This is a transformation program for transforming about 1,000-odd villages in Maharashtra. We have currently about 600-odd villages where we are working. This is for low human development index villages, where the intent is to give back to society. It's a corporate platform, a platform Section 8 company created by Government of Maharashtra, where we have all the corporates, all the large corporates, as well as a few smaller corporates also, who have contributed to this platform. And together with them, it's the first of its kind initiative in the country today. And I'm hopeful that most other states, based on the success of this model, will also replicate the similar model across India. It's a great project from the perspective that most of us do want to give back to society. And this is an ideal platform where there is a big opportunity. Coming back to trying to correlate between what we do and the SME opportunity into this, I think we are now working with a lot of these small SME companies who have unique products specifically meant for supporting agriculture, specifically meant for, say, skilling, specifically meant for increasing farm income, and a host of various reduction of infant mortality. So wherever we have these roles, large entities would necessarily not be playing any very critical role because the budgets are smaller, the opportunities are huge in terms of the per village consumption ability, which is obviously supported by a CSR initiative, and transformation that needs to happen. So the situation today on the ground is that there are no medicines, no schools, no Anganwadis, and the opportunity for SMEs that we see in this is humongous, right from solar cells to manufacturing of small solar units to small water treatment facility that can be made available to books on education and systems to support that. I think the SME platform is a huge opportunity in rural India. I know we've been back and forth because it's a very cyclical business from that perspective, but nevertheless, I feel the SMEs have a huge role to play in this complete rural transformation that's happening, one in Maharashtra, and the way it is fortunately rolling out for us, we're hopeful that this will become a huge platform to be implemented across the country and replicated. And I think that's where all the SMEs have a huge role to play.
Unit, which is, of course, which you started on your own, and I'm sure you would have had various challenges en route as you built your business. And since especially you deal with the government and the challenges thereof in terms of receiving payments and so on and so forth. So would you like to share your experience? Or what are the challenges that you faced? Because I'm sure people here, and how do you plan and what are the things that you're looking at to, meet those challenges?
We are also working with Municipal Corporation of Greater Mumbai. We bagged the order in 2014 and the first invoice was raised in 2016. So we try to convince A, B, C, D and everybody. Nobody is convinced about this idea of getting the project today and getting the money, don't know when. The option that is available for us is bank. As a founder, as a owner, we pledge our property and get certain facilities from the bank, basically the debt market. There also we faced a lot of challenges, and I'm sure many of my friends here, almost running the same business, would be facing the same. After 90 days, bank says, oh, these debtors are no good. We need debtors which are fresh debtors, like the fresh fish on the stock. So everybody needs fresh debtors, fresh stock. Like my friend Mr. Robin said, you have to be ethical. I'm trying to strike a balance between the ethics and the reality. Like every owner, we also have to pay salaries. We also have to pay something which is not supposed to be paid for getting our invoices cleared. I'm still confused, actually. Yeah.
So how did you meet those challenges? These are reality. This is the real life in India. So how did you meet those?
Meeting these challenges is it's basically from the debt from the bank, requesting convincing the banker, requesting the temporary overdrafts, etc., etc. That's the way we meet the financial challenge of working capital gap.
So Robin, coming back to you, you've done this for being an entrepreneur, and so any tips to help better communicating with the bank and getting things faster from them? Because there is bureaucracy in the banks as well. So just want to share that.
One word, ladies and gentlemen, for this answer to this question is relationship. Please maintain good, great, excellent relationship with your lenders. I have noticed in my life that whenever there are tough times, the industry or the manufacturing units or the borrowers don't keep the bankers involved that there are tough times. And that's the mistake we do. If you keep the bankers informed or the lenders informed that there are tough times, there is cash flow crisis, there is cash flow problems, sales issues, profits are going down, believe in me, they would come out with a solution. They're as much interested as you are in your business. They want your business to survive, succeed, and flourish. There is no reason why we should hide the problem, and that's the time we start enhancing our stocks and debtors and reduce our creditors, manage big working capital drawings, and of course, unethical practice is like riding a tiger. It's easy to ride one, but you can't get down from it. Getting down from a tiger is almost impossible. Therefore, one word, relationship, and faith in each other. Keep them informed. Believe in me, you will find a solution. They will help you to find a solution.
I'd just like to add on to what Robin said, is that even as equity investors, we invest in very, very early stage companies, and things usually don't turn out as people have planned. And plans never really work out in real life. And it's actually the angel investor who helps you to, maybe transform your business into something else. And a lot of companies and many successful startups actually transform into something else and actually become successful. So keeping your investor informed, even if it is equity, and sharing, your revenue numbers and so on, is actually going to help you in getting help when you need that help from that equity investor or the angel investor. So, transparency about your numbers and, the situation that you're in is actually beneficial to the entrepreneur. But sometimes we don't, because we don't want to talk about our failures, right? Because we are very, very concerned about that we are successful people and we want to keep bad things hidden, but it may be counterproductive for all of us. You want to add something?
Yeah.
But only in 1 minute, unfortunately.
Excellent. No, very true. Number one is, be it debt or equity investors, nobody likes a shock at one fine day, right? It's always better when things aren't going the way you planned. It's always good to keep them informed that whenever there is a crisis, either they can help out or at least they can suggest certain modifications, or probably they can take a hard step, right? So it's always not good, even for an equity investor, to give a shock one fine day. Number one. Number two, it also has a second objective, wherein if you're keeping your investors informed, even equity, it helps when you raise the next round of funding, whether debt or equity, because they're tracking your progress continuously, right? So you're not reaching out to them only when you need funds, but you're continuously maintaining a relationship till you would really require those funds, right? And second, I just wanted to add one point on ethics. It becomes extremely crucial, when you raise equity financing, because we come up with a lot of scenarios wherein startups or SMEs, they have historical revenues, but they are not showcasing those revenues on their annual reports, but they expect a certain valuation, right? So that really becomes a chicken and egg story. So therefore, it becomes easier for someone like us to raise funds if everything is in black and white out there.